Rick Rule. Rick Rule is a favourite of the Real Vision community. If you'd like to meet Rick and get a masterclass from the master himself, you'll want to head to the Rick Rule Symposium on Natural Resource Investing in Florida, July 23 to 27. You'll get access to industry insiders, elite bullion dealers, Gold Council members and uranium pros. Just head over to realvision.com/Rick for tickets. That's realvision.com/Rick.
What's going on, guys? It's Ash Bennington. Welcome to Real Vision Daily Briefing. Before we get started with this show, every day this week we're talking about our new platform, Real Vision 2.0. We talked about this earlier on the Crypto Daily Briefing, but I think it's worth mentioning again because it is quite important. Last week, we released a video called The Past, Present, and Future of Real Vision with Raoul Pal talking about what we're doing with this platform, the new direction the company is going in. As I said, we're all very excited yesterday. As I said yesterday, we're all very excited about this. It's a huge leap forward, I think, for us. You know, in my mind, this is really about Real Vision transitioning from a content business to a platform business. I know that that's a bold statement, and we're taking baby steps to get there. But I really believe that fundamentally what we're doing is connecting people, creating information and wisdom. There's a lot of content to talk about here. So I just want to talk a little bit about what's happening right now on the platform. By the way, if you're a Real Vision member and you haven't seen the video yet, go check it out on platform. It's called, as I said, The Past, Present, and Future of Real Vision. And you can take a look at this whole video there. In the meantime, let me just read for you some comments from our Real Vision members that I think give you a little bit of a sense of what's happening on the platform. First one comes to us from Matt P. Goosebumps of excitement. Effing awesome. Thanks, team. The work to get here would have been epic. Well done, and a massive thank you for making all this possible. I'm so grateful to be a member of Real Vision. Jake K. This is epic. Confirms everything I've always believed about why I'm investing in Real Vision. I've never viewed membership fees as an expense. They're an investment in an education and a distributed network that will compound throughout my life. Now, with the new platform, I can consistently invest in building network, plus having the tools to continue my investing and educational journey. Finally, from Adrian P. Wow, this is going to basically be a Real Vision dashboard tool, which is super awesome and helpful, so I don't have to keep Wordpad handy to save all my notes from the investing course. Stoked for this, and the bloopers were hilarious. Yes, the bloopers were hilarious. I really enjoyed that video for that reason. But I want to reference here a little bit of what Adrian was talking about with Wordpad. You know, this is really interesting because it's essentially a tool, a piece of functionality that's built into the platform that will allow you to take notes directly on the videos in the platform itself and then organize those. And hopefully we've got some AI functionality coming online soon as well. You know, this is a relatively simple feature, but what it represents, I think, is enormous. This is about connecting knowledge, tools, and network. It's not additive, it's multiplicative. When you have all of these things functioning together, your ability to get things done on the platform, to learn and to connect with each other, I think is pretty incredible. Anyway, it's a long journey. We're just beginning it now. And we want to tell you about this because we're incredibly excited about it internally at Real Vision, and we want to show you what we're doing. Here's how this matters to you specifically. Prices at Real Vision, like many other things in our economy, are rising in the next couple of months. If you're already a Real Vision member, the good news is you can lock in your current membership at up to 50% off or level up at member-only prices before July 24th. Here's where to go to check it out. It's realvision.com/level up, all lowercase, realvision.com/level up, all lowercase. A lot happening there. We're going to continue to keep you updated on this as this platform begins to roll out on realvision.com. So much, much more to talk about there in the coming weeks and months. Okay, with all that said, time for the market to turn. Welcome to the Real Vision Daily Briefing. It's Tuesday, July 18, 2023. I'm Ash Bennington. I'm joined today by our old friend, Tom Thornton, founder of Hedge Fund Telemetry. Tom, welcome back.
Ash, nice to be back. And that sounds very exciting for Real Vision 2.0. Goosebumps, as the first guy said.
Yeah, it's pretty cool, man. There's a lot going on, and I've kind of played around with the beta releases. It's super fun. I really think that this is about becoming a true platform where you have tools and functionality as well as content and the ability of people to connect to each other. Just incredibly exciting, cool stuff.
Cool.
So, Tom, I've been hanging out in crypto land for the last few weeks. I've been keeping an eye on what folks in crypto call TradFi markets, what we call capital markets, U.S. equity markets, still on an absolutely enormous tear. Give us the big picture. What's the context? How are you thinking about it?
Well, I think right now, whoever's watching can certainly, and I'm not going to take offense if they just say, "Oh, so what? Who cares?" I'm kind of looking at things from a valuation point of view, looking at a lot of technical indicators, market sentiment as well, and truth be told, I had a great year the last couple of years. This year hasn't been very good. I'm actually down on the year, which I know everybody's going to be like, "Oh my God." But I am, and I'm, year's not over. But I do think that it's gotten just a little too weird right now. Valuations are stretched. Market sentiment has been sort of muted throughout the first 5 months out of the year. And then in June, it actually turned and is now extreme overbought bearish. And for the first time since last year, we now have DeMark upside exhaustion signals on the S&P 500. We haven't had that yet. We did have one on the NASDAQ a couple of weeks ago, and you had a little bit of sideways action, and then now you have a bit of a resurgence, residual momentum. But what's interesting is I'm seeing the most amount of upside DeMark sell signals within the S&P in 18 months. And in 18 months ago, I was fairly bearish and cautious, and not many other people were, because everything was moving higher. That was around December 2021. And so we're seeing a very similar setup like that, and we've had the Magnificent Seven, which has been discussed numerous times everywhere, doing the majority of the heavy lifting in the markets. And quite frankly, I probably wouldn't have chased. I don't recommend chasing them now. I think selling them now makes a lot of sense. Maybe not short, but I think that it's just the valuations have gotten stretched. The market cap increases are absurd. That's just, and again, people can say, "Oh, so what? Who cares? They're going up," and I don't really care. Well, you might eventually care, because there's going to come a time when things just stop moving up in this torrid fashion. And as as you mentioned, you've been in crypto land. I don't know what that looks like. I mean, I'm assuming it looks like partly like the Barbie movie, like an NFT. I don't know what crypto land looks like. It sounds good. I mean, awesome, honestly. But even Bitcoin has stopped going up, and Bitcoin used to go up and was correlated with the NDX. So I think even the crypto guys in Bitcoin are blushing a little bit, going, "Oh my God, Nvidia's got, a micron or two a day or every other day." And Microsoft was the one today that went, nuts. At 11:30, they were doing a presentation regarding their AI product that they're going to put towards mix in with the Office suite, and they're going to charge $30 a person, which is very high. That's a high number for a monthly user. But the stock went up $150 billion within about a half hour in market cap. $150 billion in market cap. And someone on Twitter did a little calculation. I don't know who it was, but they said that that would be essentially 80 million users monthly at $30 would equate to about $150 billion over 5 years.
Right.
Yeah, 5 years. So it's getting crazy. And I have been looking at the earnings estimates, and usually earnings estimates go up with increases in stock prices. No, not here, not this quarter. Microsoft again is up $700 billion in market cap, and their earnings haven't really gone up. And they will, they'll beat numbers. Tesla is up $250 billion in this quarter, and they report tomorrow. And I'm bearish on Tesla, and I've been wrong on Tesla this year. I covered it last year, adding it back. But let's just think about this. Tesla's earnings for 2023 are going to be down year over year. That's the estimates, okay? But they sold more cars. So there's some disconnect here in the sense that they sold more cars, their margins are going to be hit, but deliveries for the bulls are more important than earnings, which I counter. That really doesn't make sense. But their earnings estimate for 2023, the sell side bulls, it was like 650 not too long ago. Now it's 350. And that's a material move lower. So what I'm kind of getting at is, from a valuation point of view, the Magnificent Seven have an average PE now, because this has all been multiple expansion, PE multiples expanding. Earnings are not necessarily moving up. They probably will beat, but they have an average multiple of those seven of 48 times earnings. Now, a lot of people, the bearish strategists in the market will say, well, the S&P is trading at 20 times earnings, and that's expensive. But if you take out the Magnificent Seven, the S&P is actually a lot less. It's a lot cheaper. And I'm actually not bearish on everything. I've been long. Last time I was on with Maggie, I said I like the energy stocks. The oil service sector is up 20% since, and it's been working. And that's my favorite place for the second half. And there's going to be some volatility there. So that's kind of my thought. You've got sentiment very high. You've got boatloads of DeMark signals that are, for the first time in a while, triggering. So again, everybody can say, oh, so what? They're going up. I don't care. You might one day.
So Tom, if I had to do a 2-word summary of everything you just said, it would be narrow, narrow, and overbought. Those would be my two words.
Overloved, overbought. That's it. And it doesn't mean, like when you get these signals, they start to develop. And one of the things about a FOMO market, which if this isn't a FOMO market, I don't know what is. But one of the problems is you get these very shallow pullbacks. And you get shallow pullbacks because you have so many fund managers that have missed the move, and they'll buy back a 2% pullback like it's, generational buying opportunity. And that's kind of what happens. And it happened towards the end of 2021 until a pullback was bought, it failed. Another pullback was bought, it failed. And you just started to wear down those buy the dip people. We're not there yet. It'll take time. But I do think that the second half of this year is going to be a much different half than what we've just experienced. And again, some people can say, "Oh, so what? I've made a ton this year. I made a ton last year. Who cares? So what?
Right.
So what? Actually, that's the 2 words. So what?
So what?
Yeah."
Listen, Tom, this is the reason why we have you on Real Vision. Decades of experience in watching markets, thinking the way people who run money think, and you make a really compelling case for this view of the shallowness of the pullbacks and then the constant upswing return that you see on the end of it, and of course the Magnificent Seven concentration. I mean, by the way, I'm just looking at. By the way, for anyone who may not know, is Apple, Amazon, Alphabet, Meta, Microsoft, NVIDIA, and Tesla. But I wanted to talk, and I flipped screen so I don't have it here. So just to give you an idea of the concentration here, I mean, this is a really rough proxy. We could probably do equal weighted S&P, but S&P 500 having a banner year, it's up just a shade under year to date, 19%. NDX, NASDAQ 100 up 45% or thereabouts on the year, 44.81 YTD. I mean, the massive outperformance of NDX versus SPX, just huge. More than double.
Yeah, well, the NDX was, I think it was down 35% last year, and the S&P was down 19%. So, you had a different year. And I think, and I've tracked attribution and the weightings and everything so closely for so many years. And now it's like very common that everybody's watching it, and that's good. But you should look at it from different time frames as well, and that's when we'll see. And I put stuff on Twitter all the time about that, and we'll watch. But look, I think that when we look at a PE ratio, the price has moved up tremendously. Now we need to see some of the E happen. And
Right.
to really justify the moves, you have to have incredible earnings growth going forward. I don't think the Fed's done. I think the Fed has a real problem on their hand because you've had inflation go down, and in the next couple months, with base effects and with gasoline prices being lowered by the Biden administration with the SPR release, if you start to see an uptick in gasoline prices or fuel prices for airplanes, I mean, fuel prices for airplanes have been a sort of a tailwind for the airlines, and this month to date, it's up 8%. I mean, 8% is 8%. But if you start to see that happen, I think you're going to see inflation start to reaccelerate, and that's the worst case scenario for the Fed. So that may be some people said on Twitter, oh, what's the catalyst? Well, maybe that's it. Maybe earnings fall short. I don't know. But I think that we're going to run out of buyers, and that's generally what happens when you start to see DeMark exhaustion signals play up. The other thing is I like to see a lot of them happen together. And when you mentioned equal weight, the S&P equal weight finally caught up. It had a buy countdown 13, which was a buy signal in June. And now you have a sell signal. It's the same thing with the the NASDAQ equal weight. Now you have a sell signal in that. So you've just across the board, the VTI, the total market cap ETF from Vanguard, that has it. The Russell 3000 has upside exhaustion signals. We have a couple that we're still waiting on. But when you start to see that, you should see, rule of thumb, a reversal within the next 10 days, 2 weeks, start to develop. And again, tops are hard, and you'll have to have that pattern of the failed dip.
Yeah. By the way, since you mentioned Microsoft, something that I've been thinking about here, a conversation that Raoul had with Julian Brigden, hosted by Harriet Melandri, out yesterday, I believe, on the Real Vision platform. This is an Insider Talks, where he talks about Microsoft and AI. Let's take a look at that.
For Michael from Canada's question. So he does do fundamental analysis, and he was having a look at price to free cash flow ratios for some of the big cap stocks. So we got Google, for example, that's oscillates in a 30 to 35 range. It's dipped to less than 20 times, and now it's down to 25. So he doesn't think it's expensive. But Microsoft is at 44 times. Given what he argues is low liquidity in a high rate environment, shouldn't these discrepancies correct? Aren't these valuations?
The issue is with Microsoft is we don't know how to value the AI component that they've just done, right? So is the market overvaluing it, undervaluing? I have literally no idea.
Sure.
I mean, you'll find out in a month or so, right?
I don't even think
Not really.
That's too early.
Well,
right?
I mean, at least initially, mate. At least initially.
It's going to really take until next year or the year after to figure out, have they just let a stallion out of the stables here, or is this a narrative that is fine within Microsoft's overall context, but they're such a big company? Is this driving it? We just don't know.
You know, that's interesting, Tom. I heard Raoul saying essentially it's almost impossible to quantify how to value the AI component. I think he was sort of expressing almost this like Knightian uncertainty view around the near-term earnings potential. We know that Raoul is very bullish on AI as a thesis, as a technology, but in terms of near-term earning potential, how do you know? Kind of similar to your point.
Right. I think that of course they're going to have an earnings boost because of AI. And I think that there's a lot of stuff that, well, again, the market cap on their pricing their Office suite with AI went up $150 billion today. And the market cap is up $700 billion in the last quarter. That's not going to be realized in earnings in valuation terms for decades, perhaps. Maybe I'm wrong. Maybe I'm wrong and everybody's going to have this and you're going to just be a slave to it. I just think that it's overhyped versus the market cap of the moves that we've seen, and valuation makes no sense. I'm looking at my screen right now. 37 and a half times earnings from Microsoft right now after today's move. That's, this before the COVID, it was trading at around 23 times earnings, and that people said that was expensive. I just don't think that it makes any sense at this level here. No sense. So,
well,
and again, people can say, so what? It's going up and it's making me money. God bless you. I hope everybody makes money. I just want people to be cognizant of some of the risk.
Well, you ask a really interesting question, which is how long does it take you to recognize that $700 billion increase in market capitalization and earnings over what time horizon? I mean, how do you get there, right? How do you get there?
Well, look, I think people, this is an irrational market where you've seen these moves that are just absurd in so many ways. It's a new paradigm. I lived through and traded through the .com bubble burst, and it took 10 years for Microsoft to regain its old high. And it wouldn't surprise me to see a lot of stocks go through that same situation. And NVIDIA is a great company. It's incredibly overvalued. They're going to blow away numbers. They're the best at hype. They've also had maybe the largest insider selling ever this last quarter. What do they know? I don't know. But obviously, some of the long-term holders internally in the company are saying thank you very much and taking the gain and not waiting around for the AI spoils.
Yeah, you mentioned the .com era. I was one of the young kids on Wall Street at that point. I was working on the tech side. Listen, I don't know what these statistics mean. Let me just throw this out there. These are just numbers. You interpret them as you wish, right? So December 1999, Amazon trading split adjusted $5.34. September 2001, trading at 29 cents. 95% loss in value, peak to trough, underwater for 94 months. 7 years, 10 months, nearly 3,000 days underwater.
Wow, did you just get that from ChatGPT? Did you just type that in? That's good. That's good. I might pay for that. But, the thing is with Amazon, and you could say, well, if you had just held on, they always put those stats on TV where they say, well, if you had bought Amazon at the IPO, you would have X amount today. Well, that's great. But let's just remember, it went up 6,400% twice. And, like 50% pullbacks, and then a drawdown of 95%, as you mentioned. There's no fund manager that could have said, you know what, I'm just going to sit here. I know I'm getting paid for my performance, but I'm going to allow it to go down 95%.
Right. That's part of the plan.
Maybe the buy and hold people can do that, but I think if I had a 6,400% gain and then I gave back 95%, I'd be in a mental hospital. I maybe, I don't know, maybe, that hurt. That would hurt, wouldn't it? Like, oh man, I should have sold that. It's hindsight. Ooh.
Our friend Mark Yusko has a great line about this. He said the only two people who held the stock were Jeff and Jeff's mom.
Yeah, that's true. Insiders sold it, and that's one of the things to watch in this type of bubble, when insiders were selling every share they possibly could in the run up, and it was a new paradigm and didn't matter, but it did.
I think my mom might sell if I were down 95%. I think she'd be like, I need to cut some losses here.
Yeah. Like I'm gonna sell this here. It's time to sell. But
I love you. You're my back later.
Yeah, I know. I used to have a couple family members that were good contrary indicators. They would say, I think this is going to be a good thing, this Cisco here. And I'm like, well, we've been long Cisco for 8 years. I sold it, never saw the highs again. Another one was the Pfizer. I think this Viagra is going to be good. Sold that one right when that hit. But he's not around anymore, so I can't get my better indicator. But anyway, I just think that right now, the market is in this irrational type of stampede. It's not easy from being a long-short fund manager. that standpoint is very hard. It's hard to be a long-only fund manager because you're going to underperform because you can't be just long 7 stocks. And people keep chasing them. And look, there's things that are starting to broaden out. The financials had a good day. Energy had a great day today. I think industrials are getting a little overextended here. But I really like to see the market see some of the irrational bubble burst here. And, maybe it's going to be the Fed. Maybe the Fed's going to, tighten again in September. I think that's a possibility. And that would probably spook a lot of people. And if anything, they're not cutting rates. I mean, let's remember that. They're not cutting rates because they're still doing QT. Maybe they need to increase QT. Maybe they're not going to cut rates because they're doing QT and they're going to hold rates steady. And you're not going to see a rate cut happen with 3.5% in unemployment. That just is impossible. And you're not going to see unemployment until stock prices go down. I mean, we saw all these tech companies laying people off last year because their stocks were down. They're not going to cut people with stocks higher. So the Fed's got a dilemma there. It's a tough thing. I think the soft landing narrative, you go back in history, I'll put it on Twitter, all the 70s, 80s, 90s, 2000s, everybody, all the economists said, we're going to have a soft landing. Even Paul Krugman last week said, we're going to have a soft landing. The soft landings only happened once.
Did he send that prediction? Did he send that prediction out by fax machine?
Yeah, his the internet's going to, be dominated by the fax machine. I forgot exactly what he said there, but look, everybody wants a soft landing. It's happened once in 94, 95. I don't see that happening at this stage. I don't see that. It's always a soft landing, and then it becomes a hard landing, and who knew? But I mean, honestly, it's a soft landing, and then it gets worse. It doesn't get better. So I think and people will blame the Fed. I think inflation's a much more difficult thing to control. And I don't think people realize that because we've really never had an inflation problem like what we've had. So it's going to take time.
Well, not since the Arthur Burns era, and it didn't end well. And I think that Chair Powell is very much aware of that. Listen, I want to hit a couple of questions here, at least get one in. Devin Van Curren is thinking very much in the way that I am right now. He wants to know what will be the catalyst for the next pullback. And I would add to that question, what will be the catalyst for the next pullback? And what will you be watching in terms of the metrics on your dashboard to see if it's happening?
Again, I think that there's earnings risk with some companies. We've had this. I mean, this is the near-term catalyst, I think. You've had this big run. Apple is not growing this quarter. They're not going to grow this quarter. They didn't grow last quarter. And year over year, their earnings are going to be down. The stock's up massively, and market cap-wise, it's now $3 trillion. I think that Apple's probably at risk of a pullback, and that could spook the market. You also have the Fed coming up, and you have the Treasury, who they have to announce their issuance of debt to fill up the TGA, and they've been filling up the Treasury account with T-bills. That's short term. That's like they can't step out and add any duration. They just are doing it with ultra short term debt, and they're just going to have to keep rolling and rolling and rolling that to fund our government. And I just find that to be funding our government with debt is also, just that's another topic. But doing it with short-term debt, I just think that that's short-termism. Sorry, did I ramble? You should have just said, do the meme.
That was perfect, Tom. I just want to tell you, after the show, is go outside, go for a walk, get some sunshine, some fresh air.
Yeah, I do need it. I'm due. I'm going out. I'm going out tonight. Yeah.
Excellent.
Dinner out.
Well, listen, Tom, we've obviously talked about a lot of different topics now here in this show. Final thoughts, key takeaways that you'd like to leave our viewers with. Again,
you can say, so what? And maybe it doesn't matter. I just laid out some of the basic stuff that I look at. Market sentiment is extreme. The plethora of DeMark signals matter when you have them in this count that we have. I think earnings, the bar is very, very high considering the moves we've seen. And I think that there's places to look for opportunity to buy outside of tech. And if you missed it, you missed it. I missed it. Wait for a significant pullback and then reevaluate. But right now, I think it's just too dangerous.
One follow-up. You said places to buy outside of tech. What are you looking at? What has you bullish?
I still like energy. I'm starting to look at a little some financials, but I want to see some more of the earnings that come out. I wasn't that impressed with the earnings, but I want to watch how that develops.
Well, Tom, always a pleasure. I always enjoy doing these shows with you, man.
Thanks. Well, I do as well, and I just try and keep it real.
You definitely keep it real whenever we do this, man. No doubt about it.
Cool.
Thanks so much for joining us. And thank you for watching or listening, I should say. I said watching earlier. I'm sure lots of people are going to be listening to this on the podcast version a little later in the day. We really appreciate you joining us for Real Vision Daily Briefing. We'll be back tomorrow, same time, 4 p.m. Eastern. Have a great afternoon, everybody.
I can't tell if I'm live or not. Welcome to the latest episode of I Don't Know What the Fuck I'm Doing. I've got no idea what I'm about to talk about or present, but we'll give it a go. No producers, no anybody. They came on beforehand, threw me in at the deep end, so I don't really know what's going on. Sorry, I need to get rid of my wife who's on the call, so she doesn't shout at me. Sorry, everyone. I can't tell I'm alive. I hope I've entertained you. I've done my song and dance. You fuckers need to subscribe, please.
Rick Rule is a favorite in the Real Vision community. If you'd like to meet up with Rick and get a master class from the master himself, you'll want to head to the Rick Rule Symposium on Natural Resource Investing in Florida, July 23rd to the 27th. You'll get access to industry insiders, elite bullion dealers, Gold Council members, and uranium pros. Just head over to realvision.com/Rick.